Hello, everyone, and welcome to another lovely episode of Jayfx. This is the episode 6 of the Harmonic Patterns Mentorship. All right, so we are going through a series of mentorship programs within the YouTube channel where I break down technical methods of trading the market. So you too can also be able to understand how these things are done, or maybe, do it yourself. On the previous episode, I made a simple analysis. And why that, before that, I decided that, I was going to start making my predictions and my videos live because I made a pre-recording on, I think, episode 4. Then I had an incident. Then I lost the recording. So ever since then, I said, I think I should start making these videos as time goes on so I don't have incidents like that, because you can't really predict what's going to happen. So it's better you make them fresh. So, also the insights can be fresh and you can have that connection with what you're trying to say. All right, so this is a play out from the analysis I made on the previous episode, which is episode 5. You can go check it out. And this is one of the incidents that can happen when you're using harmonic patterns. And this is another reason why I decided to use this for the episode 6, because it's more realistic. Okay, it gives you insights. And as well, since we're trying to teach people how to use this method, it's better we give them more realistic insights that they will be able to use to predict the market and expectations when trying to use technical methods like this. As you can see from my screen, the analysis, as predicted, we were expecting price to, drop down to maybe this point and then do something like this before going back up. Although we did say the swing range was bullish, right? And then we're expecting this to happen. So that was like the entire prediction from the previous episode. But as you can see, price did not get to this area of interest. And let's say an internal structure was formed because as long as the external range has not been completed, everything that forms within this range is internal. And that is regards to smart money concept and market structure. But at the same time, if you look at my chart, you can see I'm already applying a lot of market structure and, smart money concepts. And I'm trying to give people this perception that you can use harmonic patterns with smart money concepts or whichever method you're familiar with. So I'm trying to also use it so you can see me use it and find it easier to use it for even those who are strictly harmonic patterns traders. So looking at this, what happened? That's one question. And what next? Is this zone still valid? And what should we do? These are questions that could pop up in your head when you have situations like this. So I decided to make a video, although we all know trading is a game of prediction and anything can happen, right? So this is one of those things that could happen. But at the same time, is the zone still valid? That's a valid question. And what next, for market structure, since we are seeing the internal structure being followed up? And again, if you're, seeing this video for the first time or you're finding me for the first time, please, there are multiple videos on multiple series on different technical methods within the YouTube channel, from harmonic patterns to Elliot wave to wyckoff to SMC, and maybe more in the future. But mainly what I'm doing is that I'm trying to give people insights to understand how to trade the market using technical methods. Okay. So I'm not telling you this is my strategy strictly. My strategy is just putting confluence together to get the right insights to make market decision. That's if I'm going to buy or I'm going to sell. All these are confluence. All right. Mainly what I do is just draw this. And once I know this, every other thing within it is understanding what is going on within the internal range structure. As long as I can predict that, I'm good to go. I'm not looking for price to do exactly what I want. I just want to know what's going on. Do you understand? So that's what I'm trying to give to you as well, so you can have those multiple visions of how you can view the chart and be able to predict the market. Okay? So I'm not saying this is going to work 100% all the time. As you can see, it did not work exactly how it's supposed to on this point. All right, so now let's move over to what we have for today. First of all, is this still valid? Now, I'm going to look at this from the eyes of smart money concept for those of you who are smart money traders. So you can also understand mainly what we would say is the internal structure played out, right? Because if we were to take this out, let's make that hidden. What do you think is going on the chart? Price just cleared that external structure, which is the target we are assuming. But at the same time, we see multiple internal lows. right? So instead of price to react from the external area of interest, price cleared out this internal low, which would be the internal structure of this range, not the main range. This is the internal structure. You should understand market structure. If you don't, there are multiple videos already on the YouTube that teaches you how to understand market structure. Okay, so basically this is the internal structure of this range. All right. So this was the internal structure that was created to create this single range. This is also a range, but this is a range of maybe the 2 hours or the lower time frame. But this is currently on the 4 hour time frame, right? So these are all internal structures within the 4 hour market structure. Then price cleared out this area, mitigating this other block here, using smart money concept. And then we saw a clean reaction, right? So this is the internal structure, but is the external structure valid? And if the internal structure has been done, then what do we expect next? We're simply expecting price to, we trace back into discount to expect the range to continue. That is if this is still a bullish market, right? So we would say, yes, this is still a valid area of interest because if price was to clear the internal structure, as you can see, pay attention to this range. Once this internal structure here was complete, what did price do? Price came back down. Sorry about that. Price came back down to clear out the internal lows, right? So when we're looking at this, the internal lows would be what we would consider as internal range liquidity because price hunts those lows as traders would have their stop loss below them, after this high has been cleared out. But most of them don't really know that's what you're supposed to do. So they hold on expecting more moves. So price comes back down to clear those out, keeping, with the external structure. So it's still bullish, but it's clearing out liquidity. Okay. So that's the basic fundamental structure of market structure. That's how it works. If you're using market structure and you only know higher high, lower low, higher high, you're not using market structure. You're not even trading. You're supposed to know swing highs, swing lows, internal and external structure. That's how structure works. It's not just higher highs and higher lows. Okay, there's a model the algorithm follows. Now, looking at this range, a new higher high has been created, right? This would be the swing high. So what happens to all internal lows? Same thing that happened here. Basically, same thing that happened here as well, right? Price comes back down to clear them out. So this would be considered as liquidity. So we'll consider this as internal lows. So price could still fall back to mitigating this area of interest, or price could pay attention to this range and clear out these lows instead. That is making this a valid internal structure. That is, the internal structure is not yet broken. So there was no change of character from the internal structure. That's what's happening, on the market structure of this time frame. So this is still a valid area of interest. That is based on smart money concept. Okay. Now let's look at it. Secondly, is the pattern itself still valid? Since we're looking at it from the perspective of smart money concept, would we say the pattern in terms of harmonic pattern is still valid? Well, let's say I don't have enough experience with situations like this to tell you what's going to happen next. All right. So it's either I'm valid or I'm not valid, but pending, that I can't tell you. But at the same time, you can still use harmonic patterns to view the pattern of what's going on here. I don't want to do that because there's something else I want to show you guys, but you can still use that to view what's going on here to get the next prediction, basically. And if you want to learn how to use that, go and watch the previous episodes, how I use the Fibonacci, all of that. Okay, I'm trying to move forward so we that have been following up with the episodes can continue to progress with what we are learning. All right. So if you're looking for those informations, please go watch the episode 2, 3, 4, and 5 so you can follow up with what we're doing. Now let's move over to something else. I want to show you guys a unique combination of what comes in with smart money concept and harmonic pattern. Because once you understand how to use the Fibonacci ratios of harmonic patterns, all these don't become foreign to you anymore. Okay, you understand where these figures are coming from, and at the same time, you understand why these are called A, B, C, and D, X. These are all points. So from these points to this point is a single range, calculated using Fibonacci. From this point to this point is also another range, as you can see, internal. These are all internal structures of this. So from the prediction, we were expecting price to clear out these internal lows before this happened, but they were still accumulating liquidity, which is also another confluence that this could still be bullish. Okay, now let's move over to this. I wanted to show you guys something. When you're using harmonic patterns, traditionally it's just simply this. Okay, you're just trying to figure out what's going on using Fibonacci ratios and drawing either the path, Kittley pattern, shark, whichever one you're familiar with. But at the same time, when you start to look at it from the perception of smart money concept, you get a different insight. Okay, we had this conversation in the community between a brother and another brother who is very, very familiar with harmonics. Basically, his name is even Harmonic Pattern. And he was giving him insights to how you can use this pattern and most of the things you could do, when the pattern goes sideways. Those conversations were within the Telegram community. And at the same time, when you do that, you have to also understand that it's looking at it from the window of smart money concept again. Also, smart money concept is a system that follows the algorithm. So mainly, all technical concepts can fit into smart money. So if you learn smart money concept, it's like learning something that goes with everything. Basically, it's like licking ice cream. You get it goes well after every meal. All right. So smart money concept just goes with everything. So when you're using smart money concept, you can easily understand other patterns, other methods. That is only if you have the perception that your edge is not the technical analysis. Your edge is your confluence to what you use to take a trade. Let me say that again. Your edge, most of you who say, I don't want to learn a different method because I don't want to change my edge. I don't want to stick, I like this model, this, that. Models change. Models change frequently. The algorithm is not following the model you think you know. The algorithm is basically hunting the informations given. Do you understand? It's hunting data, not hunting you and your models. So as soon as the data gets updated and your models become outdated, you become liquidity. So while you're sticking to a model thinking that's your edge, you're going to get knocked off your edge because your method would stop working at some point. Not because they don't work, but you did not evolve. That's just what that's the bottom line. You did not evolve. Your edge was supposed to be your means of understanding the market, which is your means of interpreting, observing, and transmitting your data. That is transmitting your decision if you're going to buy or sell. But you got stuck along the way with, misinformation and all of that. And then you start thinking your edge is a technical method. So you stick to a single technical method. And now it's working fine. But for how long? So ask yourself, what are you doing in this space and how long do you plan to stay here? And then looking at this pattern now, in the aspect of smart money concept, what do we have? B is a very, very, very significant point. I've said this in the previous episode about, I think episode 4, after I talked about spotting the Fibonacci ratios, I talked about the points. So when you have 2 points, A, B, C, D, point B is always getting cleared out, right? In some cases, some pattern, you find point X getting cleared out. That is expecting something like this. That is in some patterns, okay? So in some, mostly X doesn't get cleared out, but B always gets cleared out. You don't really see a harmonic pattern that looks like this. This is wrong. And this is wrong in so many ways and so many reasons. And in the aspect of smart money concept, why this is wrong is because this is supposed to be the internal structure. Remember, everything follows market structure. So if this is a pattern that is based on market structure, you're expecting this. Either you're coming from a bearish, sorry, to a bullish change of character, right? So price is supposed to be clearing out the internal range liquidity. Okay, so there's even supposed to be a change of character here. That is if you know smart money concept. And that is why A is mostly long, because A is supposed to, from X to A is supposed to kind of be a change of character from the previous structure, because basically I'm trying to predict a reversal pattern. A continuation pattern is one that would look like this. Well, we've seen situations like this. There are patterns where you have C going above A as well. So, but you don't see pattern where you have B not getting cleared out. This is what I'm trying to say. This is not correct. This is just a continuation of market structure. This will just be market structure moving. This is not a pattern. Do you understand? This is just market structure moving. Low, high, low, high, low. So what was this? What are you trying to draw? You see, it's just structure moving. But when you use the other way, which is the correct way, you see a different thing. You see a change of character in market structure. That's why I say everything is based on market structure. Market structure is the key. This is how the system works. Okay, so I wanted to show you guys this so you understand. The reason why you're taking a trade from D is because D is supposed to represent the point that clears out liquidity. Again, from the perception of smart money, D is supposed to be the point that clears out the liquidity from B. Sometimes, when you look at it from, let's say, wyckoff says we have what we call a spring. If you don't know, you can go watch the episode. It's available on YouTube. A spring basically clears out all the liquidity, which is supposed to be an institutional manipulation, and then gives you insight to the beginning of a new range, right? So if you're looking at this in terms of wyckoff, yes, traders do combine harmonic patterns with wyckoff. I've had a friend who does that, so I do know it's possible. But it just depends on the IQ of how much you have understood market structure or how deep you're into the informations you get from trading. So it's based on your own IQ. Now, when we look at this, like I just said to you, wyckoff is basically saying spring or the UTAD is clearing out what? Liquidity, the accumulated liquidity so the distribution can start. These are wyckoff terms. Now, when we look at that, I told you guys we have pattern where D goes below X. In rare cases, we have people who have seen few charts that looks like this. Okay, so when you have a situation like this, or let's say primary support, automated rally, selling climax, secondary test. I'm using the full terms so you don't get confused. ARST, SC, terms like that. But those are all accumulations, and we know this is market structure moving. This is the internal structure moving. That's where you have these lows as internal structure. Then we expect the final move, which becomes what? The spring that clears out liquidity from the previous lows before price goes up. Hopefully, I can get the picture and have it on the screen so you can understand what I'm trying to say. Okay? But at the same time, my whole point, the basic idea of what I'm trying to give you is that these are models. You have to upgrade them. You have to be creative. You have to be creative. All you have to do is follow the rules of the Fibonacci. And Fibonacci basically is just having the key areas. So when you place your Fibonacci on the chart, breaking down from this point to this point, you're trying to understand where it's in line with the areas of the harmonic patterns. Some of you might, know how to use Fibonacci, but you don't know where to use them. Harmonic pattern gives you an opportunity to be frequent, to be fluent with Fibonacci ratios. And Fibonacci ratios are aspects of market structure that price always reacts to. Okay, so it can also increase your accuracy greatly. Fibonacci ratios can increase your accuracy in predicting the market for SLs and also for TP directions. So using Fibonacci is very, very good. Okay. So this is what I wanted to break down to you guys because we have gotten to that point within the mentorship where you all have had insights about the basic structures of harmonic patterns. You've had insight about the Fibonacci ratios. You've had insight about the different patterns within harmonic pattern. Currently, you're in the advanced stage. That's why I say if you're following up, please go watch the previous episodes. Most of you have already gotten the insights of a basic beginner, all right? So refreshing your informations and going through the same information you got is going to help you greatly to understand how these patterns work. That's why I'm suggesting you go back to the previous episode so you can review what you've studied for the past 2 months, okay? So basically, this is what harmonic pattern is all about. This is the traditional aspect of trading it, which would be this. Picking the areas and picking your entry, which would be on this aspect, would say just putting your entry here, okay? And having your target on that points. So this would be what we would have. But as you can see, price did not mitigate. But if you knew smart money concept, or let's say you're familiar with smart money concept, then you would have, maybe gotten a re-entry from here, SL below this, and then had your target on this point as well. So this is just market structure doing its thing from what is expecting and what is going on. What we expected was this. This is what is going on. So trading is a game of prediction. Anything can happen. Okay. Now I'm going to give you guys the new predictions I made about, I think few days back on BTC USDT. That is, I saw a clean harmonic patterns like this as well. So I made the prediction and posted it on the group. We were around this area, but price has tapped into clearing out the liquidity. This would be phase D. For me, market structure, I count the body, not the wick. Okay, the wicks are manipulations to me. So I count the body, not the wick. So when you see me doing something like this, I know I count this. I don't count something like this, I count it like this. And I would consider this as liquidity. Like I just said, not a break of structure, any of that. I count it as liquidity. So on the weeks, I'm expecting price to do some kind of stop hunt on, stuff like that. So I don't really trust that, especially when I see it's labeled as liquidity, like what I told you about phase D. Okay, so we're expecting price to tap into this demand zone. We've seen a reaction here. And mainly, we're expecting more drops or maybe something clean. But at the same time, you need a change of character from here for price to go up. And if you pay attention closely, you would see some kind of illusion was created here, a fake change of character with another block. So we can say on the lower time frame that there's an accumulation going on here. That is looking from the perspective of wyckoff. And this would be the spring. So you see why I say the edge is not really the technical method. It's simply just your confluence. This is my own edge. My edge is combining different methods to understand what's going on. Your edge could be a single model. And then if your model is trying to tell you that this is another block, a change of character, you just lost. That's your edge. So you understand me? So the algorithm doesn't really know what you're doing. The algorithm knows this system. Trust me, the algorithm knows what's going on. The algorithm knows a support or a resistance zone. So if that's the liquidity area, you're going to get stopped out. The algorithm knows wyckoff. Those are the systems, the principles of these methods that I'm trying to teach you here were studied and placed into an algorithm, which is then using those systems to hunt you who don't really follow the rules. It's just how the system works. Okay. So when you look at it from that perspective, which is wyckoff, you understand that an accumulation is going on here. So this is, let's say a distribution happened here, then an accumulation is happening here. It's as simple as that. But this is basically wyckoff. What we're doing on the screen here is harmonic pattern. So I'm not going to get you too confused. Again, this is the advanced stage of our mentorship. So you're hearing me use advanced terms. You're hearing me break down things in a more complex way. You might be confused. Please go watch the beginners episode from 1 to 5 so you can understand what's going on. From 6 to 9, we're getting serious and we're combining harmonic patterns with multiple methods. On the next episode, I'm going to go strictly on Elliot wave and harmonic pattern. All right, this episode 5 and 6 was using smart money concepts. 7 will be talking about Elliot wave on harmonic patterns. And then after that, we can go into using wyckoff, just like I just broke down for you here. I'll give you a more simple breakdown for you to understand what I mean. So you can be able to use harmonic patterns if you are a wyckoff trader. And then episode 9 would probably just round up and maybe start doing analysis on harmonic patterns for you to, use. And I think this will be all for now. Telegram was, YouTube, sorry, has officially recognized us and created a community. So if you're watching the video, you're a Forex trader, you're looking for where to share your charts, you can do that on YouTube now as well. We have a YouTube community which you can share your charts and your ideas, your insights, or the pair you're looking into, or maybe a knowledge you learned from trading you like to share with the general public. So in the future, we might be having a public, that is more conscious and active on YouTube as well. So thank you very much. I will see you on the next episode. This will be all for now. Bye.